Yeah, really interesting point. Yeah, bringing up, I guess, the micro strategies and the other other companies out there. Do you see a risk of there's going to be sort of a massive blow up if the prices were to drop quite quickly and to recall the debt, or how do you sort of watch that?
So it's less about a quick drop and it's more about a prolonged drop. Um, and so, I mean, for example, if you use MicroStrategy as an example, which is by far the biggest and therefore the one that's the most dangerous to the market, should it have a problem, their average debt duration is currently 4.7 years, meaning that even in a bear market, and this is also why they got through the past bear market with no issue. So Bitcoin can go down, and they don't get margin calls really because their debt is termed out pretty far. Um, and so it's not just a sharp. Bitcoin could get cut in half tomorrow, and it wouldn't affect MicroStrategy significantly, other than it would potentially stop how much they're doing currently, like issuing debt and equity now, but their existing stuff wouldn't really blow up because it's all been termed out. Now, if it gets cut in half and then stays there for 5 years, that's when it starts to impact these really big entities like MicroStrategy, which so far in Bitcoin's history has not happened. But there's no particular reason why it can't happen for, say, a 5-year stretch. It's just a desirable enough asset that it's not happened, but it could. There are other companies out there that have done like 6-month debt or other shorter debt terms. And therefore, it takes a shorter Bitcoin bear market to potentially put them in a distressed situation. Um, and now they're not as big and systemic as like MicroStrategy is, or now it's called Strategy, but they could get there. So I would not be surprised if we have this conversation some years from now, there's some semi-large entity that blew up because they didn't term their debt out appropriately. They bought too much at the top. Some combination of mismanagement meant that when the tide went out, they were swimming naked, to use the leverage term. Um, I doubt it'll be MicroStrategy. Anything's possible, but they're kind of the fortress that's doing this. And I generally suspect it would be one of these other entities that's not terming out their debt as cautiously as MicroStrategy has.